Biotech stocks are making headlines for their wild swings, huge gains, but also big risks. The question, are these stocks worth buying? The sector is full of potential but also uncertainty. One breakthrough can send a stock soaring. One failed trial can erase years of value. Today we'll break down 3 buzzworthy companies: APM Aptorum Group, NUWE Nuwellis Inc., and BRN's Barinthus Biotherapeutics. These aren't your typical blue chips. They're on the cutting edge of medicine, and their stocks reflect that volatility. We'll look at what they do, their recent performance, financials, and the catalysts and risks ahead. My goal isn't to give you a buy or sell signal, but to arm you with the info you need to make your own call. Let's dive in. Let's kick things off by taking a closer look at APM Aptorum Group, a company that's been making waves in the biotech sector for its ambitious approach to tackling some of the world's most pressing health challenges. Aptorum is a clinical-stage biopharmaceutical company, which means they're not yet selling products to patients or doctors. Instead, their main focus is on research and development, especially in the fields of infectious diseases and metabolic disorders, areas where new treatments are desperately needed. Right now, you won't find any Aptorum products on pharmacy shelves. Their entire business is built on the hope that their research will lead to a breakthrough therapy, one that could change the game for patients and investors alike. Their pipeline is especially interesting. It features a novel anti-infective drug designed to combat antibiotic-resistant bacteria, a problem that's growing worldwide and threatening to make many current treatments obsolete. They're also working on an innovative obesity treatment, targeting a market that affects millions and continues to expand every year. The potential upside here is massive. If even one of their drug candidates makes it through clinical trials and gets approved, the company's stock could see explosive growth, rewarding early investors handsomely. But let's be clear, the risks are just as significant. Most drug candidates never make it to market. A single failed clinical trial or negative result can send the stock plummeting overnight, wiping out a big chunk of your investment. Financially, Aptorum is in what's called a cash burn phase. They're spending heavily on research, clinical trials, and regulatory filings, but they aren't bringing in meaningful revenue yet. This is typical for early-stage biotechs, but it means the company is constantly under pressure to fund its operations. To keep the lights on, Aptorum relies on raising new capital, often by issuing more shares or taking on debt. This process can dilute existing shareholders, making each share you own worth a little less, and it can also weigh on the stock price. For investors, the most important things to watch are the company's cash runway, how long they can operate before needing more money, and the progress of their clinical trials. A positive trial result can buy them time and